Let's jump into it. Where we at? So 7 past 11. Getting to a little bit late in the night, late in the weekend, but that's all right. Again, look, the main sort of thing is obviously we get the hours done, get the charts checked out, and that sort of prior to market opening on Monday morning for us. But look, start off with the DXY here because this is quite an interesting sort of close to the week, and of course, well, this is going to be the big main driver this week, which most of the time, look, realistically, DXY is, but I think especially this week, well, we got the inauguration coming in. Was it? I think for us it's Tuesday morning. I know it's 5 o'clock local time, sort of overseas for them. So yeah, late in the day for them. So yeah, I think that must sort of work out till probably around sort of early hours Tuesday morning. So Monday could probably expect a little bit of sort of maybe a bit of a quieter sort of session. And then sort of obviously I think it's just going to be fireworks, and we got to see how hard Trump goes. Basically, like I've been more in the camp of the idea that sort of like mainly sort of in regards to China. Like I don't really sort of pay so much of attention about what he's going to be doing in terms of sort of tariffs for Canada or Mexico. I mean, of course, if there's incredibly hard sort of high sort of tariffs and he goes hard on them, well then I guess that kind of sort of sets the tone for what could be expected across the board. And I did actually hear an opposing sort of view of it all that while I sort of think it might sort of be a little bit of more of a sort of like wait till there's something you can leverage against it, the opposing side is that he goes very hard and then uses that sort of extreme sort of level of sort of basically let's just call it pain to then sort of pare back and sort of bring people to the table quicker. So not sort of wait till they've got something that sort of he wants to say, hey, look, you know what, play ball with us, and then we'll sort of, or I'll bump up the tariffs. Just go in hard, go in guns blazing, and say, look, bang, here's a high tariff, here's a high tariff, here's a high tariff. Now, what do we want? Well, tell you what, if you play ball and you do what we want, then we'll reduce it down. Look, certainly the US and Trump and the administration over there are in the position to take that kind of approach. I don't feel that's the kind of um, I don't feel that's necessarily net positive for everybody to come out sort of like guns blazing like this. So I'm probably more in the camp of sort of, as I said, I think it'll be, as he said, there will be tariffs obviously implemented. I saw something, I think it was 100 or 130 executive orders or something to be sort of initiated and that sort of on day one. So there's going to be a lot of stuff happening and the market's going to move quite a bit. But I think, as I said, I'm probably more in the camp. And of course, I don't know, nobody knows as hard as they're going to go. So they're the two ideas. They're either one, we've got comes out guns blazing and high tariffs for everybody. We are the king. When you want to play ball with us, we'll fine, do what we want. God knows what that is at the moment. Beyond these other sort of things of absorbing Canada into the US or I mean, nobody cares about Greenland. It's like 50,000 people or something in Greenland. These kind of things. And he sort of comes out with a hard approach there. If we see that, I think the expectation is basically we see continuation of US dollar strength, which obviously then is going to relate to, weaker Aussie. We're going to see, and look, this would reverberate, actually, as I say this now, it would reverberate sort of through the other markets as well, because not only, yes, stronger US dollar, you'd see sort of weaker Aussie. It'd be a very sort of risk-off kind of thing. And this is why I'm more in the camp of I don't think it's a net positive overall, because if he comes out guns blazing in that, and everybody's shocked and everybody's pissed off with it all. You're going to see all you basically a massive risk off kind of setup and sentiment with it all. This is going to sort of not only obviously Aussie being against the US dollar in that sense, but all as well being a risk asset is going to get absolutely smacked. You're going to see things like copper and silver probably also get smacked. Gold might be okay. I think gold might do probably better in that kind of scenario, which could drag silver a little bit as well. But I think sort of particularly if you're looking for sort of silver to outperform gold, so gold silver ratio down, I don't think that'll be happening with a high tariff. And I think sort of you probably see equity markets probably take a bit of a hit as well. So I don't know if it's necessarily the message you want to send straight away, like just to go guns blazing hard with it all. But again, I don't know. Nobody knows. We just have to wait and see what happens and sort of trade the fallout. So the main thing is to just be as best sort of prepared for the situation as can be, and yeah, so go from there. But a little bit of an insight to it all, I thought was quite interesting. On Friday night, we had to. It was late. It was like 1:30 local time. Uh, Trump had a conversation, or as he put, it, a good conversation with Xi, and the market liked this in terms of sort of US dollar sold off, Aussie went up. I can see now actually sort of like obviously US dollar actually strengthened afterwards. But if we get into a smaller time frame, this was the moment through here, and it got smacked right down. I mean, if we, I know I'll get back to explain in a second. Aussie, look at this, jumped like 60 points. Like, very big move on this kind of thing. And this is why I sort of think, I mean, not only just from this, 62 points for the Aussie there. Not only do I sort of think that, he will go for the more sort of lenient, I don't know if lenient's the right word, but I don't think he'll go out guns blazing from the get-go. Is because, like, he's just had this conversation with G, and it's a good conversation, and we want to be able to sort of work together, and, there's all this sort of positive stuff reverberating around with it. Um, why go and then shoot yourself in the foot, or, sort of blow up this sort of little bit of positivity in that 2 days later? You know what I mean? He didn't have to take the call then. He could have done it whenever. I mean, at least, and the TikTok thing, I mean, not that it really directly affects us here, but the guy that owns TikTok, the ByteDance guy or whatever, he's going to be at the inauguration. Then it's expected that Trump may sort of then delay, even though it's already apparently sort of come into effect now, he may delay the ban for 90 days. These are all sort of like, hey, you know what, I'm not going to be an asshole kind of moves. And sort of given those sort of points in that, I kind of feel that, again, I just don't think he'll be sort of come out and then just blow up everything, come out as being the sort of typical bad guy straight from day one. I think he'll wait till, and do it strategically, and wait till sort of like there's something that they want, something that actually China has, that they can then use that as a sort of weapon of leverage. But I don't think you gain anything by blowing it out. If you shoot it off all on day one, and yes, you can pare it back, but that's it. You know what I mean? Like, so I think the fear of, maybe more tariffs could be more beneficial than actual the tariffs. Because the tariffs, we know what will happen. You know what I mean? If he comes out and blows out the deal, blows out the sort of the relationship between the two, high tariffs, that's fine. We know what China's done previously. They weaken their currency. That combats the thing. Like, you know what I mean? Like, it's straight out of a playbook. So it's nothing new. Um, so anyway, look, we'll see what happens. There's too much sort of speculation with it all at the moment. But point is that sort of as that call came out, and all the headlines were flooding over X and that sort of saying, he's had a good call and this and that and all this sort of positive sounding stuff. Market sold off US dollar. And obviously, as I said, like Aussie got a bit of a push on that one. Trump as well wants apparently a weaker US dollar, and he wants rates down. So these kind of things could also show that sort of like, the push in those sort of directions to achieve partly another one of his goals, which is, as I said, a weaker US dollar. I don't think they want a super strong US dollar. So yeah, we'll see how this goes. Anyway, interesting, certainly very interesting sort of time, but interesting reaction around that little phone call, sort of late on Friday night. But if we actually jump onto the charts and we sort of drag these things across, we can see that obviously, the levels they're holding, buyers down here, still didn't quite get down to that alert that I would have wanted to see to sort of almost sort of confirm that push coming down here. But, like with these sort of things, with these big events coming up, like with large or high high tier bits of data, typically, if not always, you're not going to get a breakout prior to it. So you pick your ranges and trade the ranges prior to that data, and in this case, the news event to be coming out. So I think that's certainly why we saw, look, sellers held the line again up here, buyers more or less held this zone. Well, actually, a big reaction back up off this afterwards as well, and obviously closed seemingly in this period top side of the range and relatively strong. So look, it's a little bit of a bounce back, but more or less you can see from I mean even sort of pretty much throughout the whole week was that 14th there. So yeah, pretty much like after drop off on Monday, or like spike up and then drop off on Monday, more or less just sideways. And that can be expected coming into this thing. So Monday tomorrow, Asia session prior to the inauguration speeches and all this kind of stuff with it all. Sunday night for their local. I don't expect anything major. If we do get a push up on US dollar, I mean this was obviously closing in a fairly strong sort of manner here. You could see this just from a straight technical technical point of view. So it's a bit late here. I could see, look, possibly coming up, testing these top levels over here. Wick up into this area, and then maybe sell back down. If that does happen, to sort of open strong and push up higher. That's kind of area. I reckon it'll come up into this sort of zone above up over here. So around here. And then I imagine it to do similar to these and then sell back down, possibly see if the buyers want to step back in at this stage here. Alternative to that, I think this is just a bit of a correction coming into the end of the week, and we see a bit of a balance and we push back towards 109, basically 109 round number. So back down to this level through here. But I'm sort of looking at either, as I said, either a move down like this. Direction, or look, probably a push up into this area and then back down like that. So yeah, that's what I'm not expecting anything too major, prior to, as I said, all this stuff coming out till we actually know a little bit more. So they're the two zones I'll be targeting. All right, flip along. So may as well go across the Aussie, and as I showed a second ago, you got a 1% bounce just off that phone call. So it goes to show that sort of like given the right scenario, as in, basically they're not going to blow China apart, Aussie should look to recover. If we do see not incredible sort of strong numbers across the board. Interesting thing with this as well, we can see that the levels here are holding, obviously a little bit of a horizontal through the zone here, more or less still this big major falling resistance. It was actually coming down and selling off a little bit prior to this. I've been trying to hold this range through here. Obviously this is on 4 hour now. We sort of came back down. Buyers stepped in exactly where they needed to be though. I mean, this is why we have the zones marked out. So if we go down and say people in this one here, exactly where the buyers were here. Funny as because I bought this zone out here. I got right down the bottom, 6.6 or something. So just at this zone here, so right at the bottom of this wick. But obviously being the end of the week, and I was a bit like, I don't know, and I moved up and I moved up. I took profit here and took profit here, kind of thing, whatever. And then that's when the new headlines started coming through because it jumped a bit. I was like, oh, okay, this is interesting. I thought maybe just, technical level, late at night. Wasn't really like watching it too close. And it just kept going and going. If we have a look on put on like a 5-minute chart, you can see that this just powered up through here. Like it was just boom. And I was like, oh, that's good. Yeah, take some profit. Oh, take some profit. Okay, bang. And of course, it just kept going. So yeah, it was interesting. I used it to close a couple of positions and that just to sort of lighten up a little bit coming into this. Excuse me. Coming into this week. Because I think the main thing, as I said, it's just that nobody knows. So Aussie is in a very precarious sort of position. If we put onto a higher time frame, you can see it's really trying to hold this zone. But of course, it was really trying to hold this zone through here. It had a really good effort at trying to hold this zone through here, but they haven't held. You know what I mean? We have still got this negative divergence playing out. And this is what I'm saying. So from a technical standpoint, you've got your little stop out area down here, which is actually just a recap of this. I'll put it on, let's see the Aussie chart. This sort of thing that we're looking for on, this is more in the weekly, doing these. And this is what I marked out last week, saying that this is very, very typical of Aussie to do kind of thing. Have a nice clear defined support area. Admittedly, this one's a little bit different with it all, but back over here is a reasonable area. Drops down and then up and squeezes. if we get a bit of data, or not so much a bit of data, if we get a bit of news and that the tariffs aren't going to be as bad as we think, technically it's due for a little bit of a sort of a correction through here. We could say, okay, here's a fib coming down. We can start to look at where we go up. Even at a minimum, you can see obviously just here, as I said a second ago, price tried to hold through here. There was a nice little rejection before dumping down another couple of 100 points. That's still only the 38%, but you've oversold this on the weekly. You're oversold. It's tipping up. It's moving back up. Well, it's not moving back up yet, but it has crossed over. We've put in, a couple of sort of seemingly what would be, if you have a look at it like this, hanging man kind of candles. If we do get the sort of lower tariffs, and it's not sort of, it's not World War III, but you know what I mean. If it's not all blowing up come day one, then there's a technical reason, and then there's a fundamental reason that we could see this recover at least a little bit more. And we could say, look, where have the buyers been quite solid? I mean, look, there'll be little levels through here. And of course, getting back above 63, that's a swing high from this channel. But if we get a solid push out here and we see some volume come back in, I think people will go, okay, that's it. The landscape changes a little bit. Let's close a bit of our shorts, because remember, there's a lot of profit on the table from these shorts coming down here. Then you've got fundamental backing here. You've got a negative divergence. You've got it holding this area. You've trapped in part of the market that thought it was going to keep on rocketing down sub 60. Perfect time. Squeeze. Take the money. And that's where the pain trade will push it back up this way. And we can sort of target, 64.40 probably in the media. It seems pretty good, because even if you want to sell these things down, I've gone over these a couple of times and that, but if you're sort of trying to sell this thing down, you sell it down here. Well, yes, you can still just sell it down here, but why not sort of push it back up here and then start selling it from there again? You know what I mean? There's more profit to be made doing this leg plus this leg than it would be to just continue this leg off the lows down here. We'll see. You know what I mean? There's obviously a lot of, probably a fair few stops getting sort of set up around here, so there's probably a fair bit of little liquidity down under here, but this may have been what got grabbed in this little point here. This may have been the liquidity grab already seen, and it's pushed back down and then pushed back up. Look, it didn't close overly strong. I mean, despite that little push up now that I'm having a quick look at it, you would have sort of liked it, obviously, to have at least closed above 62. Only 13 points off, but it's not the end of the world. But you know what I mean. At the same time, that was a good indication of what can happen if we do see the tariffs sort of fall in the right direction. So not very easy to sort of like call sort of the actual level sort of as I said, Monday I think will be quite quiet anyway. But I would say certainly you want to be holding above 66.70, 66.70, and like obviously close around that area. I think we'll probably see a test of the lows 66.30 and possibly even a little touch underneath. But over 4 hour oversold, daily's negative divergence. Weekly's oversold. 1 hour, well, who really cares? I mean, it is tipping down from the hot top there, but as you can see, this is just like a dribble back and then just dumped a little bit just into close. So look, it's a ugly sort of chart at the moment. There's not really, you can't really go, okay, here's the structure, this is what they're doing. It's just a sideways. They've grabbed the liquidity down here, and now it's just a wait and see. But certainly downside, sorry. You'd want to stay above, as I said, that 61.70 level. Upside, I think, look, honestly, I think you'd probably be capped around this area here, 62.20. Above this line, it's really jamming its head up above the top of this falling resistance here. So a push up here, although this is just like a little range area kind of thing, that would technically take it outside this large channel, which, as you can see, has been respecting since October or so, whenever it started selling off from the highs at 69 cents. So, this top side of the channel, the resistance here, is very vital. It's very important. This is why I think that even if you do get a little bit of a push, I think that's where it may be capped, 62.20, till we know more from the tariffs and this kind of stuff. As I said a second ago, DXY, if we do see US dollar as a whole get a bit of a push up over to here, if we see this open up and sort of push up a little bit strong, and the market starts buying the US dollar, I mean, they bought it quite strongly into close, but if they start buying it at that point, come Monday morning, Asia session, I think that'll be what'll drive it down, and maybe they sort of retest the lows down here, 61, 61.30, and that's certainly not jumping into too much through Asia. I think it's just going to be very range bound. Maybe give it a shot down at 70s if we sort of come back down to that, but certainly nothing too much. If you get underneath that, then really sort of testing the lows. But I don't imagine to see a great deal of sort of breakouts and that sort of prior to it all. Flip across, we got gold. One interesting thing with all these, they're all really holding the levels very well. As you can see, this is gold put onto, say, the 4 hour through here. This was the move we were looking for, obviously through this little sort of horizontal, bang, up to the next level. Sellers came in exactly where they were supposed to be. So, I mean, there is structure to this thing through the mayhem of it all. And we are sort of seeing that sort of like, it was coming up. I mean, this was the target, 67.20, 67.15 to 67.20 was the target. What'd you get to? 67.24. So that target taken out, bang. And then as expected, sells back down. Where does it go to? Well, this is where I was saying initially as well. Maybe it just jumps off 67.02. 67, apologies, so a slight bit of dyslexia. It's not even dyslexia because Aussie's not even in 67. It's 27.02 for for gold here. Obviously, bit of a reaction, and then as I say most weeks, you don't disregard the last hour of the week. I mean, it doesn't really matter what direction it's going. It's generally just people sort of shoring up their positions before the weekend. But it is holding on the back test, and even as it did sort of come down into it, just to touch under 67, bang, and then up over here. So really all it is at the moment is a structural break, found resistance where it was supposed to, sold back down, that's fine. It's definitely still a clean cut line. Get rid of this one. A clear cut line of where the breakout for the next level is. Yeah, I mean, the fact that it sold down from here, well, there's no shocker, that was expected. It is outside this triangle, so it certainly does look like it wants to sort of continue up. But again, fundamentals will blow technicals out of the water because and particularly these large ones, because it changes the landscape. People will trade, okay, look, given this certain scenario, yada yada, we price it at this level. So we'll buy it up to here. In this case, we'll sell it back down. We saw that happen. If you change the landscape and we see the tariffs come out super strong, super weak, whatever, then people value the actual, however they sort of come to their conclusion of what they sort of want to value it at. They come to it based on the information that's presented to them. And if you get higher tariffs, well, that changes the landscape. If you get lower tariffs, that changes the landscape a little bit. So then you need to recalibrate where your levels are based off sort of how the flow goes. And we could see this thing very much rocket one side or the other. As it is at the moment, as just a straight technical setup here, it's breaking out and it's moving to the top side. It's hit swing highs and sold down. That's all it is at the moment. Oops, not that one. So again, it's not a super exciting sort of weekly plan, because anything that you put in place to plan now could just be out the window, most likely will be out the window by Tuesday. So it's all you can do is kind of see how is the market shoring itself up prior to this bit of this turbulent kind of period. If we see the tariffs not too bad, I think it might put a little bit of pressure on gold. But the saving grace with it, I still believe that it'll fall back into main lines with DXY in that there'll be an inverse relationship. They have been running very much in sync for a while. If we put put gold on here, where's DXY? Doesn't line up the best with this. You can see this here vaguely. So, DXY has obviously sort of just been on a rip. Gold's just been sideways with it all. But they are both generally in an upward trend. So they are kind of more or less still running together. We're not sort of seeing, these sort of typical ones that we've seen in the past. Oops, where they're kind of like this period here, and gold's down, gold's back up, US dollar down. Like you can tell here, it's a very inverse relationship that they have. But realistically, come through this period, actually through April last year, we can see them both consolidating. US dollar sells off, gold up to the top side, and then sort of as gold peaks, well, US dollar actually started moving a little bit earlier, didn't it? Started moving in September. Gold kept going. And pretty much ever since September, the relationship has kind of been a bit more one of sort of moving in sync. This is on daily here at the moment, but I do believe that eventually they'll fall back into their main relationship, which will be US dollar. In this case, in my sort of opinion, I think we'll see US dollar sell off. And I think we'll see that'll be the catalyst that'll get gold fall back into its normal relationship going inverse to US dollar. And I think those sort of moves will sort of be moving up into, 2,900, 2,950, maybe even 3,000. I think we've definitely got some more upside with gold. That all changes underneath 25.50. Under 25.50, well, okay, definitely a different game then. But we're at 2,700 right now, so $150 off that, and we're very much in the top side and in and have the momentum on side to see a continuation of moving up. So that's a bit more of a sort of broad picture of it. Get the fly off there. But sort of given that, look, at the moment, it's holding the levels here. Break back down below here. Well, I don't know if this one here would hold. I'd probably be looking more around 26.65. See what happens around this zone over here. We could see, obviously, this was the launch pad a week or so ago to get it, up to the sort of most recent highs and testing this major area over here. But for now, it's just consolidating at the highs. Little pullback, little sort of inside structure move to retest the previous resistance levels. So yeah, nothing super exciting with this one here, but yeah, I think we'll have to sort of wait to sort of see. But I think eventually, maybe not this week, but over the coming weeks, if US dollar sells off, I think that'll be the catalyst to get gold pushing a little bit higher. Flip on, we've got silver. Silver underperforming a little bit. Still didn't quite. I still had that price target 31.20. What did we get up to? We got to 30, just under 31, so 20 cents off on that one. So I'm actually going to delete this now because it was that sort of double bottom idea through here. But the thing with these double bottoms as well, that's pretty much what they're, a couple of points either way of it all. It really depends where I guess you make the neckline from here. And again, close but not quite. But regardless, let's delete this and delete this. So this one as well. So as we can see here, it's still the same sort of thing. It's trying to sort of rally back up through this area here. We did actually, if we have a look at this, I think we actually may have come through a falling resistance this week. Did we make it through? No, rejected pretty much on the line. And this is one thing that I was sort of saying through the week as well. I think sort of like when I put my little sort of 2 cents to it, I think we were saying, sorry that I said I was a bit on the fence with silver at this point, and I think we were coming into this here. So look, it's not out. As I said, this was the little supposed head and shoulders. I think you can negate this thing now, get rid of this and get rid of this as well. Look, more or less, I think it's sort of it's moving okay. It's it's obviously trying to rally up here. Again, it's a bit hard to get too committed to anything in that with what's sort of coming up this week. I think sort of downside, 28.80 is certainly where you want to hold. They're pretty clear-cut levels that we got here. If you go underneath 28.80, we're looking for 27.70. Under 27.70, you're looking for 26.60, 26.65, 56. These kind of sort of zones through here. But, you're up around 30, you're over $30 at the moment. So that's just, base case for the downside scenario. But certainly, at the moment, I think it's pretty clear cut. If you get above 31, round number, takes you out of this sort of falling resistance. At the moment, you've got an area where buyers have sort of been quite, they were sellers back here. They turned into buyers. They were in buyers, more or less buyers, yada, yada, sellers, buyers. So it's quite a pivotal sort of area through this at 30. So you want to see this level hold. If 30 holds, then that gives you a chance, and you're really looking at 31 for your breakout zone. Oops, not that. You're looking probably more this as your breakout zone. So above, 31 pretty much on the money. So that would then take you out past this falling resistance. You'd be looking up around sort of 32, and that'd be your major breakout level. I think if you can get above 32, okay, we keep on rolling on. Bit of work to be done to get up there. I've got a direction one. But I think sort of like, certainly around here, you could sort of see it come back up here. I'd expect a reaction from 32. I wouldn't be expecting a breakout the first time. Push back up to 32, say 32, 32.10, whatever, a couple of cents in change there. But you'd expect probably a little bit of a sell down should you get up to this area. Something to this sort of effect, if you are going to get some break. So look, above 30, 31, 32 and a bit, that's your major breakout. But certainly in the interim, above 31, there's a buck to play with, in my opinion, with that move there. That's the top side move with it all. I think realistically, you're looking at 29.50 and then 28.90 for your downside levels. Let's put a little zone through in these ones as well. Zone here. I think they're kind of the levels you're really sort of playing with. More sort of intermediate ones through here, major ones through here. I think if you take out these levels, the higher ones are there, I think that's going to give us the next direction, the next leg for silver. Seeing if we can make anything off this. Not a big fan. We do have a bit of a chop in that underneath this. Does daily give us anything better? Daily we got a little bit of a level down there. Yeah, pretty much through these zones here. But yeah, certainly I think they're the clear-cut levels you're looking for at the moment. As I said, above 31 or below 29.50. All right, keep ticking on. We got copper. Copper got the breakout. Look at this, it sold back right where we kind of where we expected. So this is how the breakouts can sort of happen with it all. And this is, again, we've got so much stuff happening this week. This is on the daily. We're seeing it overbought, smacked back down from that level. But if we get into lower time frames, it's very much holding those zones. I mean, this is the plan. Break this level through here, like we saw back prior to the election. Strong support level here. 1 attempt, 2 attempts, 3 attempts to hold it. Well, technically maybe 4, whatever. 3 or 4 attempts to hold it there. But once it went, bang, shot back up. You look, where have the sellers been prior to that? Well, they've been up here. Where'd they come in? Bang, right on the money. So exactly where we sort of had it marked out to be. So it just means that structurally it is holding. In terms of sort of like an actual breakout, look, we have got a bit of a breakout through here. It did get hit quite heavy onto this. Despite sort of the sellers coming in where we thought they would be, the buyers were very much happy to let that come back down. So you want to sort of see that it can hold this area through here. You want to consolidate outside this zone. At best, I mean, not at best, at least, at worst, you kind of want to see a replication of this move over here on the outside over here. A bit of a tussle back and forth before you may sort of go. But again, your major breakout is still above this level over here. There's a lot of work to be done. And if you look at the old triangle, as it broke out, there was many attempts to go through here. That, as I said, look, that is 105 days or so that it took from an actual breakout to a point where you could say, okay, yes, it's actually then doing the next major leg. So, I mean, not to sort of blow the thing, but, that's taking us till mid-April, should we see something similar. And obviously, a couple of times, it obviously went lower than the breakout level. So it doesn't mean that we can't see 420 again. Doesn't mean we're not broken out like going up here, next week. I would expect a little bit of chopping, and that through this area over here, unless we get some blowout thing with the tariffs and everyone gets super scared and we see copper bail down. But at the moment, still bullish, very strong for the last 2 weeks. And you'd probably just want to see, I'm looking for it to see if it can consolidate around this zone here. Wouldn't want to get too much below 429.8. I think if you're getting too much below here, you're probably going to see that momentum because it was such a quick sort of momentum move up to the top side here. If we get back below 2770, I'd expect a fairly fast move back down to 406, 403, whatever, this sort of lower support area through here. So I think that's the danger for the downside on copper, just in the short term. And finally, we've got China. So this is the big one. This is what, really myself, a lot of the market is kind of looking at. We've drawn it up, as you can see, obviously on a few different time frames. So these are why you got so many colors that are very much the same path moving through here. But it's more or less the same plan. I mean, a point or two either way. Who cares? Call this your main trend. This is what we've been looking for. So if we get into, what was it, 4 hour, I think it probably will show us. So we did have this little medium short-term trend that has been holding. Bounced off here, kind of attempted to go down, This was that last move into the end of the week. This is obviously the 4 hour candle here. This is when they had the call with Trump and Xi. And, the headlines were kind of like, as I said, that, they're happy to work together. They're sort of talking about things. They were talking about fentanyl. They were talking about tariff. I don't know if they're talking about tariffs and that. I don't know. There was a couple of topics today. Anyway, long story short, the general tone and the market reaction from it was one of positivity. And positivity that China's not going to be blown apart. And that's why you saw the yuan strengthen. Because the market's just scared that the tariffs are going to come in super strong. PBOC are going to weaken the currency. Yuan's going to go through the roof up over here. I mean, they're right at a very, very crucial resistance level. So we know what's going to happen should he go gangbusters hard on it. The market's going to push it up over here. Whether the PBOC sort of push this back down or not and intervene, well, it remains to be seen. I mean, look, obviously they've got the firepower to do it should they want to do it. They've said that they want to, they've been coming out very humbled in that with their comments more recently, and that saying, look, we want stability. We want the currency to sort of maintain itself. We don't want to sort of see these mad, wild fluctuations because that's what they've done in the past, and it hasn't worked well for them. They're not in the same economic position they were in 2016. They're saying, look, if you're happy you play ball with us, we'll play ball. We will kind of, whether they actually do it behind closed doors or not, well, that's a different story. But, at least at face value, they're going to sort of try to work together in unison. And the fact that they both came out, well, I don't know what Xi actually said, but, Trump, there's report that Trump saying, look, we had a great call and it was really good for them. It was really good for us. Bum, 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 bum. Well, that shows that they're hopefully trying to actually sort of follow up on that and not just destroy them. They're not a threat the same as they were in 2016, so I just don't see why. But I don't want to get stuck in my own narrative. If it comes out and they do go hard, well, need to be ready to trade that as well. But point being is that if we saw a quick little move, a quick little indicator in that reaction from that phone call of what the market is going to do, should there be seemingly positive news for China. Positive being, we're not blowing you out of the water today. So, if that's a bit of a teller, a telltale, a little bit of a sort of tell through it all, we could probably expect to see a couple of these levels get blown. Look, it's got this little sort of, it doesn't mean that the whole thing's automatically going to come back down like we have seen it previously from this upper levels over here. But I think you're going to see a lot of this move, potentially unwind a bit. If we put this up over here, and we can chuck our fib on it, like, we're still yet to break through this level. So we go on this one here, making green for us. Look, if we come back down, and this is what I've been saying, this level down over here, 38% retracement. We know that's still bullish, keeps it in the top end up here. But, should you break, you've broken this little short-term trend. Should you break this medium-term trend? Should you break this little sort of support through here? I think that's a fairly easy, straightforward trade to expect one, to expect one sort of come down over here. I think that's a fair target. Which, in the terms of how much it moves and that's still, 1.5, like from break point from here, that's 1.25%. So it's not a big mover anyway. So that'll definitely take a little bit off the top, give the market a chance to sort of reevaluate. As I said, the landscape is going to change a bit. Do they want to keep betting on China's demise and a weak sort of yuan and US dollar continue to rip to the top side? Or do we see US dollar start to sell off more broadly and against the yuan included, and then possibly break here? If you break this level over here, this 38%, the 7.21, I think you're coming back to your main trend over here. So should this one break, that's the move that I'll be really hammering for. As to sort of whether this hits at this point, well, it's obviously a sliding scale. It's along this line over here. But the general idea is if you break this level here, that's where I'll be looking for. It's not to sort of say they can't break this and then sort of rally back up here and we just see a large period of ranging. That could definitely also still happen. But it's just forward thinking. If we break here, this is where I'm aiming. Watch what the market does here. The market will buy this regardless. If it comes down again, breaks a second time, bang, that's the bigger move down there. And that one we're looking at, let's just work out to, I mean, realistically, depending again, a couple of bucks either way, that's another 2.6%. 2.6%. So, you're looking at a big 5% push. See how my maths is going in the middle of the night. 4.5% move. 4.6, whatever. 4.6%, give or take, move from where the resistance level is. And that would bring it back, realistically, if you look at this, it's still in that large triangle. Still an ascending triangle. So I think that's very plausible. I mean, obviously, this, when you look at it like this, you're probably more looking at something like this, something more to this sort of effect like that. But the point is still the same, to come back to this sort of main trend. Let's move this up a little bit so it's a bit more straightened. Whatever. Bang, like this. Anyway, so yeah, again, you can't really sort of bet too much. If we go above this, look, there's a lot of air up over here. This thing could really sort of pick up steam. And I think the thing is, if you see this pop up here, it's not just going to be running by itself. You're going to see a lot of other things break. So yeah, that's pretty much it going over the charts. Other sort of thing that we got to keep an eye on is BOJ at the end of the week. We got obviously the yen has been sort of strengthening up a little bit in anticipation for BOJ potentially hiking rates. They've said this a number of times, and each time they get cold feet at the last second. So again, I don't think they're going to be in the firing line for tariffs, from what I've sort of read, from what I've heard. So should they not, again, that's how they would be combating it. Should they be on the receiving end of some heavy tariffs? The idea is obviously weaker currency will combat the higher tariffs. So if they've got higher tariffs to combat, they're not going to sort of they're not going to drop their rates, but they're not going to increase them. They're just going to keep them low. So if we have a look at this here, look, the expectation there is a bit of a 25 base point move, but I think that can change, obviously, as we get a little bit closer to it. In terms of news, we've got a little bit of China data coming out. That looks like they're sort of pretty much sort of holding flat come Monday, tomorrow morning. The rest of it's looking all pretty flat, sort of through the day. You got it's actually a bank holiday on Tuesday as well. I think it's Martin Luther King Day. That's, as I said, that's still the same time that they have when they have the Trump talking. So it's getting late here. It's almost 12. You got Trump talking there. So yeah, bank holiday for the US over there. Look, honestly, the market's still going to rocket around. whether the banks are open or not. Maybe the equity markets are hold their own a little bit till they're sort of back online on Wednesday and that. But certainly, I think, yeah, I don't think it'll be a massive difference to the reactions. Moving forward, Claremont count change and that sort of ticking up a fair bit there from the pound. One thing just to go over as well was on the Friday. No, it was on the Thursday. There was those yeah, it was some manufacturing numbers there. So this was on oh, it's Friday, so I must have covered that on the Friday sort of analysis of that. But that's an incredibly big number. I'm still a little bit sort of shocked at that one there. Um, anyway, moving on. What have we got through the rest of the week? I think we're fairly light in terms of data and all. We've got CAD CPI still sitting around, seems to stabilize a little bit. Still a small tick down. We'll see how this one sort of plays out. We got quarter on quarter for New Zealand, also ticking down a little bit there. New Zealand's looking very precarious against the US dollar as well. That was another one that's in danger. Moving through, bit of US, retail sales, nothing really that important. And then a bunch of PMIs punching out on the Friday as well. So really, apart from Trump talking, the BOJ is the big one for the week, and that's obviously not coming in till the end of the week. So we'll see how we go from there. All right, that's it from me.